Hello, everyone, and thank you very much for joining us today on this discussion on responsible lending. My name is Philip Benton. I'm a principal analyst at Omdia, and I'm thrilled to be joined today by Andy Patton, who is the Chief Commercial Officer at Enfuce. Welcome, Andy.
Thanks very much, Phil. Really great to be here.
We're going to kind of just dive in here and talk about the topic responsible lending, and in the context of the uncertain macroeconomic conditions at the moment. And we've seen that there's much higher costs for consumers and businesses alike. Consumer confidence is fragile. I would say business risk face a liquidity crisis. We saw recently that the insolvency level in the UK is at an all-time high since 2008. So obviously, obtaining flexible credit in the form of responsible lending is imperative. But Andy, how would you recommend consumers and businesses navigate these uncertain times?
Yeah, it's a real perfect storm, isn't it? At the moment, we had the pandemic, which obviously was a huge shock to the global economy, and now we've got the cost of living crisis, which has sort of sprung shortly thereafter with unprecedented, high rates of inflation and associated interest rates over the last sort of 20 or 30 years. So really lending and our sort of flavour of lending, which is supportive of responsible lending, is absolutely paramount because, as you say, a lot of businesses are facing huge liquidity crises. They're really struggling in terms of their ability to pass on their heightened costs to their consumers. They're facing huge challenges, hence the large number of businesses going under, especially SMEs across the UK and indeed across Europe. And I think that having a really buoyant but really well-focused lending industry to support those businesses at this time of need and this time, again, of really fast technological change, where they might be investing in AI and a whole host of other aspects, is really key. And certainly from the Enfuce perspective, we really accent on working with our customers who are focused on being responsible lenders. So part of the solution, providing those solutions, providing that liquidity, but doing it in a responsible manner where they're not exacerbating the financial difficulties by loading a huge amount of debt on already fragile companies. So again, I think it's a really fine balance to achieve. But we're working with some fantastic companies that I think are really serious and focused on achieving that.
So that's really interesting. Thank you, Andy. And I guess we've seen in the context of lending the popularity of buy now, pay later.
Yeah.
And we've seen a new study from the FCA, the Financial Conduct Authority, that buy now, pay later is an all-time high in terms of the usage. So around 14 million adults in the UK are using it on an active basis at least once every 6 months, and have even reported that the users who use buy now, pay later 10 times or more per year are 4 times more likely to be in some sort of financial difficulty, whether missing a payment or being late on the payment. So how is lending changed in terms of being more responsible? Is buy now, pay later a responsible lending product at the moment, or do you think there's other alternatives that should be considered?
Yeah, I think the reason why we've seen an explosion of the use of buy now, pay later is that it's a really fantastic proposition. It's embedded, it's there at the point of need by a consumer. It's hugely convenient. It enables them to pay in installments and spread their payments over a period of time. So the reason why it's been massively popular and successful, and we've seen some huge companies grow off the back of it, is that it's a great customer proposition. I think that it's much more of a consumer proposition in the main than necessarily a business one. And certainly the huge growth, I think, has been fueled by consumers. I think that really where we stand as Enfuce is that we want to be thinking about what enabling technologies are there, how we can embed our solution. And our solution is really predicated on our credit ledger, which is our engine, if you like, that can power both B2B customers of ours and B2C customers of ours. And the buy now, pay later aspect is one aspect of that, but it's by no means the be all and end all. So, for example, we as Enfuce could work with credit card providers where actually the customer has the protection of a credit card, of a credit agreement. The credit checks have been undertaken on that consumer. And then we could power installment payments in terms of paying off their total sort of borrowings, if you like, or their purchases. So for me, thinking about that great technology, that convenient technology that's really been bracketed as buy now, pay later, but adding aspects around that mean that there's still the consumer protection, there's still the understanding of that person's credit worthiness and their ability to repay and not get pulled into the debt cycle that was referenced in terms of the FCA analysis and research. That for me is really exciting because it enables us to take a great technology that's very popular, but put it within maybe a slightly broader wrapper that still provides a fantastic proposition for that consumer. And a similar line of thinking is really there for businesses as well. We're working with fantastic brands.
Perfect. That makes sense. And I guess this is in the context of wider trends within financial services. So you kind of touched upon being at the point of need, which would be in reference to embedded finance and how this can enable that area to grow more quickly. And as we kind of discussed, the future of credit is massively changing, and as you rightly point out, buy now, pay later has been the catalyst behind that change. But how is Enfuce looking to support businesses in this evolving world of credit, and what kind of technology are you providing to ensure businesses can carry out this change?
Yeah, great question, Phil. And I think that really we put a sort of a thought forward earlier about why there's been this explosion of lending and the need for that in terms of liquidity and some of those cost of living crises and those sorts of things. I think that where we stand is that a lot of companies will come into this space increasingly because of that need. I think that what they need is then a great sort of backbone, a great technology, a great platform to be able to power their end consumer or business propositions. And that's really what our credit ledger and what our overall offering seeks to give those companies. We work with companies on a white label basis. So we're very much in the background providing that proposition that will enable them to have the go-to-market and to unlock value from their business customers and consumers. We're very focused on that backbone, on that credit ledger. It's very sophisticated as it stands. We're constantly looking to enhance and improve it. It already enables a huge amount of transaction processing, spend controls, FX markups, handles that aspect, disputes, fraud. All of those capabilities are already, very strong in terms of our overall proposition there. And I think the other reason why we're probably seeing an increased focus on this area of activity is that with all the interchange regulation, which happened a few years ago now, companies' ability in certain business models to make money off interchange has become very much delimited, whereas when there's lending economics at play, then there is the opportunity for some really interesting and vibrant business models to emerge off the back of that.
So, Andy, we've spoken a lot about the growth of different models and use cases emerging in the industry. Can you tell me a bit more about the interesting use case you've seen and and how you think they're going to develop in the future?
Yeah, absolutely. We've got some fantastic partnerships already in this space. We're working with other fantastic brands. An example would be MBX, which is a crypto exchange in the Nordics, where we partnered with a credit line provider called Nordiska to actually leverage our credit ledger and our credit capabilities, but actually the loan value, if you like, came from a third party, in that case Nordiska. So again, being able to provide that backbone, being able to provide that strong and really sophisticated platform in terms of the credit ledger, and then bring in a credit line provider, I think that's a really interesting use case that we've seen. We're working with other fantastic brands. An example would be Starcart, where it's an e-com company where they use a virtual disposable card to make purchases online for their customers, and we power that capability, and they've seen phenomenal growth. A really interesting platform whereby, again, there's that lending element in terms of the credits that they're providing for the purchase. We're working with expense management companies that, again, incorporate a lending capability into that, such as Zavoy, and alternative lending companies, again, on that sort of more future thinking way of how they work with their end customers and maybe fill some of the gaps that traditional banks have left in the market, such as cred. So I think there's a whole host of different and really compelling, really interesting use cases that Enfuce is involved in with its existing customers and partnerships. And obviously, we're very keen to keep innovating and keep powering great propositions and great brands that want to enhance their business models and their offering in this alternative and responsible lending space.
Fantastic. That's incredibly interesting. I think pertinent at the time, in terms of the demand not being just from traditional financial institutions, but from alternative non-financial institutions as well, showing that the lender capabilities are across the board. So that's great. Thank you. So with that, I think I'm going to conclude and thank you, Andy, again for this fascinating discussion on responsible lending. I've been Philip Benton, Principal Analyst at Omdia, and I hope the audience has enjoyed it as much as I have. Thank you.
Thanks very much.